Joining me now, Mark George, the CEO and president of Norfolk Southern, fresh off of Q3 earnings. Mark, it's great to speak with you. Thanks for taking the time today.
Oh, thank you, Morgan. Appreciate you taking the time for me. It's a pleasure to be here. We've had a great day today. We got a lot of momentum in this company right now. The employees are energized. We just had our earnings call this morning, and we feel good about the results we reported. We got really good safety metrics. We got really good revenues and really good earnings growth.
That's great. And to that point, Q3 earnings beat expectations. Operating ratio was a particular bright spot given the improvement we saw quarter over quarter. To what do you attribute that, and how does that set you up for the rest of the second half and the previously stated guidance around operating ratio?
Yeah, great question. Look, we've got tremendous momentum in the productivity that we're working on as a team. We've got a brand new operating team in place, and they're making a huge impact out of the gates. Extracting productivity wherever we see it. Fuel efficiency was actually improved by 5% in the quarter, and that was following 4% last quarter. So we're doing really well there. We actually had employee attrition in the quarter, about 3% year over year, while we had volume growing 7% year on year. So right there, that shows a very big driver of our productivity and why you can get 570 basis points of margin improvement.
When I hear you talking about volume growth of 7%, how much of this is a company-specific story as you do implement aspects of precision scheduled railroading? You have COO John Orr working alongside you as well. He joined the company earlier this year. You're cutting costs. You're improving operations. So how much of this is company-specific? How much of this is a reflection of the broader macroeconomic environment?
Yeah, there is elements of both, but I would say there is a strong piece of company specific because as we've talked about when we set up our strategy, really good service begets volume. And in this case, sadly, the industry has been losing volume for 30 years because of episodic breakdowns in service. And, our customer base, the industry's customer base, has been migrating more and more to the highway. So we have a lot of opportunity to recapture share with a more sustainable, consistent service product. So what happened here in the past 6 months is we finally got our service back up to excellent levels, not just acceptable, but really excellent levels. And it's had the effect of attracting freight back onto the railroad because we have such a good value proposition for our customers. We are a more fuel efficient and frankly, a cheaper form of moving freight. So our customers would prefer to be with us, especially those that aren't hour sensitive in their transit times. So as soon as we can start providing good, consistent service, it's natural that we can start to recapture share. So I'd say the preponderance of this is basically a share recapture story.
So can you sustain those improved service levels? And I guess how much more can you improve them looking to 2025?
Great question. I think the answer is yes. What I'm really excited about and really proud of is the way our network responded after Hurricane Helene. That was the most consequential weather-related impact to our network since Katrina. And what our engineering organization did to clear over 15,000 trees, we dealt with about 54 destroyed walls, retaining walls for rock slides. We dealt with significant washout across many miles of our network, especially around the Asheville area going into Eastern Tennessee. It was remarkable that we got all of our core routes reopened within 72 hours. That's the definition of resiliency. So I'm seeing evidence now that this is sustainable. That kind of event, if it happened a year ago, 2 years ago, 3 years ago, we would have been out of commission for 3 to 4 months. Now we were up and running in a matter of days. And I'm really confident that we're going to have this momentum going forward. We got the right recipe and we got the right team carrying it out. So it gives me a lot of optimism as we go into Q4 and then we go into 2025 that even if the market is weak from a demand perspective, we have recapture opportunities from a share perspective that will allow us to grow.
You've also contended with, and I realize that this started at the beginning of this month and ended, at least for now, shortly thereafter, but you've also contended with a port strike on the East and Gulf Coast ports. So how much has that impacted operations. How much of a pull forward did we see in those intermodal containers that do tend to be linked to retailers and other consumer-facing businesses?
Yeah, so there was probably some pull forward earlier in the month of September as people were anticipating the strike. And then, frankly, at the very end of September, kind of the spigots turned off, and we had to turn off some spigots as well for export because we didn't want containers and such to get stranded at the ports. And we started to see this migration out west. So it does provide some complexity in the overall network. And remember, we are an integrated network, all the class ones. So the west comes to the east. We interchange at a number of points in the middle. And for sure, it's creating some complexity. And I think out west right now, they're dealing with some congested ports. And certainly it's going to be impacting us here. Until we get some clarity on rebalancing of freight, it's going to be impacting us probably through January, maybe even later than that.
You talked about momentum. 19 months ago, you had the East Palestine derailment. Can we say that the impact of that, at least from a financial and operational standpoint, is behind the company now?
Yeah, what you would have seen in today's release is 2 consecutive quarters now where our insurance recoveries has exceeded the cost related to East Palestine. And much of those costs now relate to monitoring, some legal expenses. So the costs have been coming down. Insurance recoveries have stepped up. We've collected over $650 million of insurance recoveries. So I'm hopeful that the East Palestine costs will continue to go down. I was just there last week, really impressed with the work that's been done. The site looks terrific. And right now we're just working with the EPA to hopefully put a bow on it and have it behind us in 2025.
The last 2 years have been tumultuous for the company. The derailment we just talked about. We've also had this high-profile proxy fight with an activist investor, and then the dismissal of your predecessor, Alan Shaw, just last month because of a workplace relationship. It raises the question, what do investors need? And I realize you've been with the company for a while. You're a known entity. You were formerly CFO. But how do you keep or get the company, I guess I should say, on track? And what do investors, what do workers, what do shippers and customers need to know about what your tenure is going to involve?
Look, I mean, there's been a lot of noise in the back. The reality is our employees are energized by success. They want to be part of a winning team, and we're winning again. And, you know, the noise even last month doesn't matter anymore. It's a bump in the road. We are moving forward. And our strategy is sound. You know, the strategy we laid out, which has my fingerprints on it, makes a ton of sense. You know, we have got to focus on operational excellence. That's been my hallmark in my career coming from an industrial products company. And what John Orr and his team are bringing in the way they're deploying their operating system is very reminiscent of what you would see in industrial products companies with regard to quality systems, whether you call it Six Sigma, whether you call it ACE, where I come from, which was really referring to achieving competitive excellence. It's all about establishing standard processes based on best practices. And when you have issues with standard processes or you have a breakdown somewhere, you do relentless root cause analysis to identify it, put it back into your standard processes so that the mistakes don't repeat themselves. That's exactly what John and his team are doing right now. John will talk to you about war rooms, for example. That is a very good example of a relentless root cause analysis. We have an issue out in the field. John goes in with his war rooms. They identify it. They fix it so we don't have repeats. That's where, you know, being a process person and a quality-oriented person, we're going to bring those worlds together. On top of that, we're going to work on our culture. Really try to build a speak-up culture and a two-way communication channel where our communications matter from leadership down. But honestly, I value tremendously the communication coming up from the field because that's where a lot of the great ideas originate. And we need to create an atmosphere where people feel comfortable bringing up their ideas and also their concerns and not feel threatened by that. So people are really optimistic, to be honest with you, as we turn the page on some of the noise and the drama in the past, having great results. People can be really proud of kind of wearing the badge again and moving forward.
Have you spoken with Ancora and Jim Chadwick yet?
Well, you know, we don't talk about, you know, I'm not going to get into conversations I've had with specific employees, but rest assured, Anybody that wants to talk with me, any investor, I have those conversations, so you can surmise that answer. And we want to really have good, constructive relationships with all of our investors. So we try to engage whenever we can, talk about the business, bring them in, see the operations, and again, we're looking forward. And I think a lot of the concerns that were raised in the past that maybe were the origin of that are no longer a concern. We are running, we are operating well, and we got wind to our back.
Final question for you. Given this whole conversation, you expect, and given all the goods that you move across your railroad and the network, do you expect a soft landing?
I would say it feels like there's a soft landing happening. Either way, the good news is we've got idiosyncratic opportunities to recapture share. So while a soft landing looks like it's on the horizon, the reality is we've been in a freight recession for the past 3 years. So the consumer's been healthy, but honestly, they've been spending a lot on entertainment, travel, things that we don't move in the freight world. So hopefully there's a little bit of a rebalancing in the economy back towards goods and products from just services and travel and entertainment. So because we've been dealing with a freight recession, it's been more of a challenge in our world. So that's what we're looking forward to, is if there's a soft landing, let some of it come back to us with regard to a shift from services to goods. Even if there's not, we've got idiosyncratic opportunities to go out and recapture share that's been lost because we've got this great service product now.
Mark George, the new CEO of Norfolk Southern, thank you for joining me.
Thank you very much, Morgan. Take care.